Right, so let's look at 3 questions in relation to preparation of financial statements in public sector. So the first question is about receipt and payment. The second question is about cash flow statement. And then the third question will be the preparation of statement of financial performance and then statement of financial position. Now, you must follow this very carefully and know how to identify the item and treat various items in the transactions. So let's look at question 1. The following are the balances extracted from the public accounts on the consolidated fund for the year ended 31st December 2012. So let me go down straight and look at the requirement of the question. A. Prepare receipt and payment of the consolidated fund for the year ended 31st December 2012. B. Statement of cash and bank balances at the beginning and at the end of 31st December 2012. And then state 5 components of the statement of the financial statement of the public accounts of the consolidated fund. So the first thing is to prepare the receipt and payment account. Now the receipt and payment account is just like the cash book. So we're going to record all the money that we received during the year, and we're going to record all the payments that we made during the year. So let's flip back to the top of the question. So we are dealing with 3 zeros up. So let's look at the first item, direct tax. Direct tax, is it a revenue or a payment? Is it a receipt or a payment? Direct tax is a revenue into the consolidated fund. So we bring it up, straight up. Okay, so direct tax, and that is 1044460. So we bring the direct tax like that. Second, compensation of employees. Compensation of employees, is it a receipt or a payment? It's a receipt or a payment. It's a payment, right? So compensation of employees, it's a payment, so we bring it under payment. So compensation of employees, and I'm going to put that here, and that is 808,672. 808,672. Then non-financial assets. What is it about? Non-financial assets. Now, non-financial assets probably means an acquisition of assets, so it's an expenditure. So non-financial assets, and that is 134,779. And then the next thing is goods and services. Definitely it's a payment. So goods and services. So goods and services. And goods and services is 404,336. 404,336. The next one is indirect tax. To the consolidated fund, indirect tax is what? A receipt. So we bring it under revenue. An indirect tax, and that is going to be there as indirect tax 939,556. 939,556. Okay? 939,556. Grants. What is grants? It's a receipt, right? So grants will be a receipt to the consolidated fund, and that is 28,100, 28,110. Interest expenses. Interest expenses is a payment. So interest expenses. And interest expenses is 398,138. Social benefits. Social benefits is also an expenditure, okay, that we undertake on the consolidated fund. So social benefits, and so that is 238,882. Then other expenses. Other expenses, it's other expenses. It means payments. So other expenses is 159,255. Then we have other revenue. So other revenue will also come here. So other revenue is there as 50,928. Then we have National Health Insurance Levy. National Health Insurance Levy is also a revenue to the government. So National Health Insurance Levy is a receipt into the Consolidated Fund. So 79,368. Then we have depreciation and amortization. Now depreciation and amortization are non-cash items. So we are not receiving anything, we are not paying anything. So even though this item is in the balances, the examiner says you should prepare receipt and payment. And so that will not be recorded anywhere. So take note of that. So the depreciation and amortization will not be recorded anywhere because it is not a cash item. The next thing is loan repayments. Definitely it's a payment. So loan repayments. And loan repayment is 3,056,000. The next thing is levies. Levies are also income that the government receives. So levies, and that is 27,184. Then we have loans received. Loans received. So loans received is an income. My space is already shutting down. So loans received is 4,245,150. Then the next thing is loan recoveries. Loan recoveries. Now loan recoveries is also an income, so we bring it also there. So loan recoveries. That is 1166 in relation to that. Then there is also other payments again. So other payments. And other payments there is 68,428. Then the cash at the beginning of the year for that period. So these are what you must understand in relation to the preparation of the receipt and payment accounts. And we are done. So what you do is to add all the payments, add all the revenue. So all the revenue will be total receipts, and that will be 6,415,922. And all our payments will be 5,268,490. So when we less that, that will give us a total excess. So excess, now the receipt is more than the payment, so this is going to be excess receipt over payment, sort of a surplus, and that is going to give us an excess of 1,147,432. So this is how we prepare the receipt and payment. Please note the identification of the items. So all these are revenue. All these are revenues. Loan received, loan recoveries, national health insurance, direct tax, indirect tax, grants, all these are revenues. So we record them as receipt, and they are money we are receiving. But in these balances, you realize that there was depreciation and amortization. That is a non-cash item, so we didn't bring it anywhere in the accounts. Make sense? Right. Then the B aspect, the examiner said we should prepare the cash and cash at the beginning of the year and at the end of the year. Now the cash at the beginning of the year, that is 1st January 2012, in the balances is 813,442. So what we do is we add this excess to that balance, and that will give us the closing balance for the cash, and that will be 1960894. And so that is the requirement to that question. And then the C aspect of the question is we should list the financial statement of the consolidated fund, and that is the statement of financial position, the statement of revenue and expenditure, the statement of receipt and payment, and then the cash flow statement, as well as the notes to the accounts. So this is what you must understand in the preparation of the statement of receipt and payment accounts on the consolidated fund. Remember what income or what revenue or what receipts are, and then what expenses or payments are. Very, very important in the identification. Right, so let's look at our second question, which is going to be a cash flow statement. So let's look at question 2. The following are the balances at, question 2. The following are the balances extracted from the public accounts on the consolidated fund of the government of Ghana for the year ended 31st December 2012. So that is the second question. And we've been given the balances. Let's jump to the requirements. Prepare the consolidated fund statement of cash flow for the year ended 31st December 2012. So we are supposed to prepare the cash flow statement. Now let's look at the items there. We see other payments, we see financial assets, we see inventories there, we see work in progress. Work in progress is a cash outflow, and that will come under investing activities. Then sales of fixed assets, investing activities. Shares and equity purchases, investing activities. Advances received, operating activities. Advances paid, operating activities. Securities and other securities other than sales. Goods and services cost, compensation. So let's look at how we prepare the cash flow statement in relation to this account. Remember, I told you that when you are preparing the cash flow statement, from the operating activities, you are going to look at issues about all the payments and all the receipts in relation to the fundamental or the core activities of the organization. So let's look at the consolidated cash flow statement. So, a consolidated fund statement of cash flow. Consolidated fund statement of cash flow for the year ended 31st December 2012. Right, so we're going to just have a single cash column, but I can do two cash columns here. So I'm going to do two cash columns so that it will help us to do our presentation very well. Now, so we will start with operating activities. Remember, I mentioned also that the operating activities refers to the core activities or the core revenue and the core payments of the organization or of the public sector. But this time around, we are dealing with what? The consolidated fund. So if we look at our entries, we were given other payments. What is other payments? Remember the first question we saw, other payments was part of the expenditure. So we're going to just slot that up. Other payments is part of the operating activities, and that figure is 14,200. It is going to be a cash outflow because it's a payment. Then we are also giving goods and services cost. So we bring that. Goods and services cost, that is 202 168. That is also a cash outflow. Compensation of employees. It is part of the core activities of the consolidated fund. Compensation of employees. And that is given to us as 381,420, and that is also a cash outflow. Then we are also giving social benefits. Social benefit is also an expenditure, and it's also a cash outflow of 79,628. Then interest paid is also a core activity. The interest paid in the question is 318,511 Ghana cedis. Then we see taxes. And you know taxes, it's a revenue, so that is going to be an addition, and taxes of 976,778. Then we see grants. It's an income or it's a revenue, 14,056. Then we see other revenue received. Other revenue received, and that is 25,464. Then we have other receipts, and so the other receipts there is 53,277. So when we add all these, we're going to get the cash flow from what? Operating activities, right? When we add all these, we're going to get the cash flows from operating activities. So can we do that? Let me do that. So minus 14,200 minus 202,168 minus 381,420 minus 79628 minus 318,511 plus 976,778 plus 14 and 56 plus 25,464 plus 53,277. You can also punch it, and that is minus 805,453. So you can also punch it and get your answer, and that is net cash flow from operating activities. So that is the net cash flow from operating activities. Then we come to the next aspect, which is going to be investing activities. Now, you remember what all the things that are treated under investing activities from your format? All the things that we bought in terms of long term is going to come here. So, investing activities, we're going to bring the fixed assets here. And the fixed asset is purchases, so 20,000 cash outflow. Then inventory. It's also a cost that we're going to incur. It is not part of the core activities of the organization. That is why it is coming under the investing activities. Inventory is not core, okay? It's not part of the core operations on the consolidated fund, because we can acquire inventories of maybe fertilizers, we can acquire inventory of government stores or whatever it is, and it is more or less like using it for a project. So that is why we bring it under investing activities, and that is 25 and 8. Then I told you about work in progress. And the work in progress, now inventory is a cash outflow. Work in progress also is 12,120. Then sale of fixed assets. Sale of fixed assets. That is a cash inflow of 15,230. Then we have shares and other equity purchases. Shares and other equity purchases is an investment activity, and that is going to be 28,130, and it's a cash outflow. Then advances recovered. Advances recovered. We bring it here. It's an inflow of 14 and 8. Then advances paid will also be brought here. Right? My space is almost consumed. Then the securities other than shares will also be brought here in relation to that. Then you realize that in this question, the financing activities we're going to include the domestic loan that we acquired, and that is 2,122,575. That will be under financing activities. Then external loans or external debts paid, it's 8,245. That is going to also be under financing activities. Then domestic loan paid, and that will be 1,579,756. So that is how the cash flow is prepared. Remember, operating activities, you're going to bring your payment and then the receipts here. Under investing activities, fixed assets, inventory, work in progress, advances, any sale of fixed assets will be brought here. Then under the financing activities, issues such as loan received and loan repayment will be captured under the financing activity. So this is how we prepare the cash flow statement for the public. Now, so let's look at our final question. That's question 3. And that is going to also be in relation to the consolidated public fund. But let's go down to the requirements. We are supposed to prepare the consolidated statement of revenue and expenditure for the year ended 31st December 2017, and then they prepare the statement of financial position for the consolidated fund. Right. So let's see how we go about the preparation of that question. Now, the first thing I want to look at in this question is to do some workings. That is, carry out the various workings that I need to carry out before I can prepare the revenue and expenditure account. Now, so what I'm going to do is to go through the workings, and then let's see how we can prepare the receipt and payment account. So the following are the balances extracted from the consolidated fund on the public accounts for the year ended 31st December 2017. So we have taxes paid by individual, taxes paid by companies, and other direct taxes. Remember, the first workings we need to do is direct tax. So under the direct tax, we're going to bring these 3 items: taxes paid by individual, taxes paid by companies, and other direct taxes. So these 3 items will come under direct tax, and when we add all, that will give us the total direct tax that we are going to take to the income and expenditure, or the revenue and expenditure account. Then we can see taxes on goods and services. Now, taxes on goods and services is more or less like an indirect tax. So we're going to also carry out workings for our indirect tax in relation to that. And so taxes on goods and services will be part of indirect taxes. So taxes on goods and services. Then we can see national pension contribution as the next item. Now, all that item there will come under what we call personal emolument. Personal emolument or compensation of employees. So national pension contribution, that will come under that. Allowances to employees, it will come under that. Non-established post salary come under that, and then established post salaries also come under that. So are you following the idea? The direct taxes, we are bringing taxes paid by individual, taxes paid by companies, and other direct taxes. These are the three items under direct taxes. Then under indirect taxes, we see taxes on goods and services. It's an indirect tax. We bring that item here. Then the next item there is national contribution, and we said that will go under compensation of employees, or what we call personal emoluments. Allowances to employees will also go under that. Non-established post salaries will go under that. Then established post salaries will also go under that. Then we see grants. Grants is another income, so we will bring that as a separate item under the revenues of the company or of the public or of the consolidated fund. Then we also have other revenue that will also come as a single item there. So under revenues, we are doing two workings, direct tax and indirect tax, but we are not done. Let's continue. The next thing there is materials and office consumables. Now, materials and office consumable will come under a working called goods and services. Remember, I told you to go through the formats, right? When we come here. So that will come under goods and services. Then we see utilities here. That will also come under goods and services. Then we see rentals, travels, and transport. That will also come under goods and services. Then we see training, seminars, and conferences. That will also come under goods and services in relation to that. So the four items will come under goods and services. Then we see domestic debt interest, and you can see external debt interest. So domestic debt interest and external debt interest will come under another working called public debt interest. So under the public debt interest, we are going to bring the domestic debt interest and then what? The external debt interest in relation to that. Then we go to the flip side. We see, okay, before then we see cash and bank balances. That will be a balance sheet item. Advances and receivables, that will also be a balance sheet item under current assets. Then we see long-term receivables, that will go under non-current assets in the balance sheet. Then we see payables here, that will go under current liabilities in the balance sheet. Then we see deposits and other trusts monies. This will go under liabilities, that is current liabilities, or it can go under non-current liabilities because it's a trust money. Short-term borrowing, non-current liabilities. Equity investment is a non-current asset. Infrastructure, plant and equipment, non-current assets. Work in progress, also a non-current asset. Domestic debt, external debt, these are all non-current liabilities. Then we see LEAP program, school feeding program, and school uniform program. Now, so these ones will go under a working called social benefits. Social benefits. So under the next working called social benefits, we're going to bring that LEAP program, the school feeding program, and then the free school uniform cost. So all these three items will come under social benefits. Then we see other expenses. Other expenses means other expenses, so we bring it under the payments account there. Then we see consumption of fixed capital. That is like depreciation. Now, since we are preparing a profit statement, that will come under the payment segment or the expenditure segment of the revenue and expenditure accounts. Then we see general taxes on goods and services. That will come under indirect taxes. Then we see exercises. That will come under indirect taxes. Then we see customs and other import duties. That will also come under indirect taxes. So you set out these workings and then you do you add all these figures there in relation to that. So once you have been able to carry out these workings, the income or the revenue and expenditure account as well as the balance sheet preparation, it's going to be a cool job for you. So now that we've seen how to do the various treatments, when we add the various arithmetics, we're going to prepare our consolidated. So let's look at it. Consolidated fund statement of revenue and expenditure account. So consolidated fund statement of revenue and expenditure account. Remember, for the year ended 31st/12/2017. Right, so let me bring my currency 3 zeros up, and then let me put my workings here. Then the first thing we bring is to bring what? Our revenue. Now under the revenue, we did the workings for direct tax, and so that was the first workings I wrote down. So direct tax, that will be workings 1. When we add all the direct taxes, we are supposed to get 522,229. Then indirect tax, that was the second workings. That's workings 2, and that is 602,308. And then we had grants. I told you it's an item we bring straight up. That is 14,055. And then we also had other revenue. That's also an item we just slot straight on the face of the financial statement, 25,464. So these are the total revenue for the government. So we add all, and that will give us the total receipts. The total revenue. Let me just say total revenue. So when we add all these, that will give us 1,164,056. 1,164,056. Then we bring our expenditure. Remember the expenditure workings we did? We did workings for personal emolument or employment and compensation of employees. So personal emolument, and that will be for workings 3, and we can bring that. So let me just close this, and we can bring that as 673,892. And then we saw goods and services. That was the 4th workings, and that will be 123,973. Then we saw public debt interest. And that was workings 5, and that will be 61,986. Then we saw social benefits. That's working 6, and that is 82,694, 649. And then we saw other expenses. We just bring that one straight up on the face of the statement, and that is 20,662. And then remember what I said about the capital, what was the statement? Consumption of fixed assets. That will come here because we are preparing a profit statement. So consumption of fixed assets. And that is also 123,973. So when we add all the expenditure, that will lead us to 1,088,135. So you can see that the revenue, total revenue, is more than total expenditure. So that is going to lead us to a surplus of 75,921. And remember, I told you that you're going to calculate the net accumulated fund or the net accumulated results. So that is how we prepare the revenue and expenditure account. So how do we prepare the net accumulated fund? In the preparation of the net accumulated fund, all we do is to go for the opening net accumulated fund, which is 30,671,838. Now that is a debit balance. Debit balance means it's a negative. So we're going to add the surplus we had in the income statement, and that is 75,921. So when we add that to the 30,671,838 negative, we are going to get the balance for the accumulated fund as 30,595,917 in relation to that. So now that we finished that, what we do is to prepare the statement of financial position for the consolidated fund. So let's look at that. Statement of financial position . So statement of financial position for the consolidated fund. Now, how do we prepare the statement of financial position for the consolidated fund? All we bring is to bring our assets, then under the assets, remember under the assets, I mentioned that we can divide them into non-current assets and what? Current assets. So looking at this question, let's do that. Let's first bring our current assets. So if you look at your formats, our current assets will include cash and cash or cash and bank balances. It's a current asset. And from our question, cash and bank balances was 980,449. That is the cash and cash balances. Then we were also given advances and receivables. So advances and receivables will come here. Now, we were not told whether the advances were long-term or short-term, right? But since it's a receivable, I'm just assuming that it's a short-term receivables, and that is 30,082. And so I believe these are the current assets. Then we come to the non-current assets. The non-current assets will include issues such as equity investment, so the equity investment is 1,809,876. Then I see infrastructure, plants and equipment, and that is also 1,014,574. Then I see work in progress. Remember, I told you that is an investment, and so it's a non-current asset, and that is 152,444. So these are the items that we bring in relation to the assets. Have we brought all of them? Let's see what else we have there. Now there is long-term receivables. So that is a non-current asset. So long-term receivables. So this advances and receivables here, yes, we assume it was a short-term and we were right. And that is 1,418,308. So these are the total assets of the consolidated fund. So we add all, and that gives us the total assets. Then we will bring the liabilities. So liabilities, Under our liabilities also, remember we will bring both the current liabilities and then the non-current liabilities. Now, so we see payables here, that is a non-current liability, or that's a current liability, payables. And the payables here is 605522. And then let's see if we have other payables also. Then we have other non-current liabilities in the question, such as deposits and trust monies. Now, deposit and trust monies are a liability, so we bring that under the liabilities of the company, of the consolidated fund. Then I think we have short-term borrowing also here. That will also be part of the current liability. Then we have domestic debt as 11,859,000, part of the liabilities. Then external debt 60,141,574, also under non-current liability. Right, so these are the liabilities in relation to that. Then what we do is, at the end of the day, we bring the accumulated results. So the closing accumulated results we had, that is the opening accumulated results plus the surplus we had, we added it, the closing balance there, we bring it here in relation to that. So at the end of the day, your total assets should be equal to capital plus liability, and the capital here is the accumulated results plus the liability. So this is how we prepare the financial statement on the consolidated fund. Remember again here the identification of the items. So remember how I picked the item and identify the item. Remember how we did our workings. Definitely the examiner is going to ask you a question. It can be the receipt and payment, it can be the cash flow statement, or it can be the financial performance and the financial position on the consolidated fund. It can also be in relation to the central government, and so you just have to be on the lookout as to what has to be revenue and what has to be an expenditure. These are what you must understand when we talk about the preparation of financial statements in the public sector.